One of the items that I thought was interesting that I came across this week, Nouriel Roubini, well known for calling the financial meltdown, wrote for his clients this week a top 10 list of risks for the global economy. Number one was household deleveraging in the United States. Households with massive amounts of debt paying down that debt, thus meaning they don't have a lot of disposable cash to spend on anything else, and obviously now they're being pinched by inflation. Also, ongoing labor market weakness, the housing double dip, which we're seeing in the United States, the effect of the housing dip on the balance sheet of financial companies, also rising oil prices, the European sovereign debt issue, which we saw this week with Portugal and Ireland, the federal debt, and even the budget, fiscal drags, especially state and local authorities. We have in our newsletter this week stories where you have certain cities laying off 50% of their workforce. Also, the end of quantitative easing 2. Roubini believes that we will see quantitative easing 3 and general investor unease thanks to the Middle East and Japan. And all those things are concerns that everyone should be aware of when it comes to their portfolio and investing. And Harold, I think all of those concerns are very valid and point towards having an allocation of precious metals and diamonds in your portfolio.
Oh, you bet. Again, everything is just unfolding the way that we thought it would, and it's a domino effect. So, again, I can certainly appreciate how hard, they seem to be working to try to right the ship, but these are the same people that put us into the situation in the first place. So how much, credibility do they have? Wall Street is so separate from every place else in the United States. And, the other thing that you just brought up, Randy, that's confusing is that they're talking about the job numbers, and they were excited about it when they came out on Friday because they say the unemployment in the States is down to now 8.8%. But on the other hand, they're going to let go so many government workers because they just can't afford all the teachers. I mean, what's happening in Detroit and all throughout the United States, there's rioting going on primarily because they're letting teachers go. In Florida, it's like a bloodbath here. So I think that we're going to see such a large amount of government workers be let go that I just don't see how the employment rate is going to continue to come down, and we don't believe those numbers anyways. So all in all, I'm very comfortable with the fact that we're heading into difficult times. I don't mind heading into difficult times as long as we have all of our scenarios taken care of. If you've got physical metals, you've got diamonds, you're light on your stock positions at this point, you're not speculating, you're keeping some cash on hand, and you're paying your debts down, we're going to get through these difficult times. And for those of us that do this correctly, we're going to come out of this smelling like a rose, and we're going to come out of this with interest rates at 20 or 25%. Again, what I'm looking forward to is cashing out and being able to put our money back into the banks or into investments that are very safe, where we're going to pull 20% and not have to speculate at all. So, again, I think that if we just stick with our game plan, remain conservative, and do what we're doing, we're going to come out of this doing extremely well.
In our newsletter this week, we have a story out of, it's from the New York Times. Costa Mesa in California sent out pink slips to 200 of the city's roughly 450 workers. In Michigan, Lansing, Michigan, they're laying off 150 cops and firefighters, and they're laying off 20% of the city's workforce. And in Pennsylvania, the state is taking over the Pittsburgh, Pennsylvania, pension funds due to the problems with their pensions that they're having. And that's another crisis that I think is coming in the United States, Harold, and we have about 30 seconds left here, is that the promises that have been made regarding entitlements and pensions, the money's not there, and eventually you're going to hit the wall on that.
It's going to be a real negative. Again, these poor people that have worked and worked and worked, and they haven't seen their pensions funded, is just a terrible thing, and just one more slap in the face as to what these poor people are going to suffer. And
it's a reminder, really. Take care of yourself. Really learn to take care of yourself in this environment.
Randy, that is right.
Thank you very much.
Right.
Thanks, Harold.
My pleasure. I wish everybody a wonderful weekend, very profitable day, and I'm looking forward to another great show.
10:30 in the morning next week on 6:30 CHED in Edmonton. Our show will be running at that time. Listen for us then. And don't forget to invest in precious metals. 1-866-623-2002, wwpmc.com, the website for diamonds, rarecoloreddiamonds.com, 1-800-432-1022 to speak with Harold about diamonds. That's it, another edition of the World Financial Report on radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.